What if I told you that while exploring chocolate factories, cruising Swiss lakes, and dodging jet lag, I still managed to grow my portfolio to over 56% year to date, beating the S&P 500 by a massive margin? Hey everyone, it's Isaac here from Streetwise Economics. I'm back to Canada after 10 incredible days in Switzerland. And yes, I was actively trading the markets from Europe. Today, I'm breaking down exactly how my portfolio performed, what trades I made, and the powerful lessons that I learned about risk management, patience, and balance while trading abroad. Like I always like to say, this video is meant for educational purposes. Trading involves both risks and rewards, and you should always do your own due diligence or consult a financial advisor before making any investment. Now, I'm gonna quickly share with you the performance update. Let's start with the numbers as of May 16, 2025. My trading account closed at $33,692.52. That's a total gain of $12,208.43. This is Canadian dollars. And if I look at the growth trajectory of this portfolio, it has gone up by 56.83% since I started this challenge. Meanwhile, the S&P 500 is up only 1.52% as of May 16, 2025, when I took this screenshot for this statistic. So even while I was traveling, I was able to stick to my strategy and outperform the broad market, that is the S&P 500. So you can see that my total equity in Canadian dollar terms is $33,693. And the market value of the trades or the positions that I held as of May 16 amounted to 6,451.52 Canadian dollars. And I like to hold cash. And you can see, I'm going to put on the screen that my cash balance was $27,241. Now, the profit alone as of May 16, 2025, like I said, it was 57% up, but it's in dollar terms 12,208. I think for me, the key thing and the most important thing is the rate of return. Like if I look at 57%, that satisfies me if I am able to maintain this. Imagine just being able to grow your money even in a year by 56%, right? But again, this is just in May, and I don't know how the market is going to, what the market is going to give me, but we will see. Maybe I will close the year higher or lower than this return that I have as of May 16, 2025. But my goal is to see how I'm going to perform. Now, this week was profitable, and more importantly, it was just low stress. That's because I had positioned my trades while I was still in Canada, and by the time I go to Zurich, I did a video that's gonna air on this channel. It was very easy because I had done my homework and I was just waiting for specific entry and exit levels. And while I was going out doing some touristy things, as I have shared, and I have some other videos that are going to come out on this channel, you guys, you will see that we had a lot of fun. But let's talk about the trades. I had some key positions, and they are, I'm going to put them on the screen. I still hold Aritzia, and there's some profit there, and I'm gonna show you guys here. But I still want to hold Berkshire Hathaway just as a defense and a safety measure, because what I've seen is that as the market drops, the equities market drops, most people tend to go to Berkshire Hathaway because it is stable. So it's kind of like if it goes up, but what has been happening is that in the stock market, there's been a lot of volatility, and on the bond market, which is more like a very important indicator if you're an investor, there's been a lot of volatility there, the yields going up and down, and I'm gonna do that. I'm gonna record a video to actually share my thoughts on that, the bond markets, the currency market, and the stock market, because it's very, very important to understand the whole interplay of those markets, because in my view, they are very, very important. I still have a leap that expires June 2026 for Reddit, but unfortunately, as I was traveling back, Reddit went up to almost 129. I wish I had a sell order, and then now it's down. So I'm just gonna hold. But the good thing is, if you have a leap option, it means it expires at least, it's a longer dated. But the idea is the options, they lose value as they get towards the expiry time. So right now I still have time. So even though I'm recording this video on 22 May, Reddit is trading, let me see here, is trading just around $100 right now, $99.92. But I'm just gonna hold, but I'll make a decision maybe if I get to 9 months or 3 months before expiry and is still on down or lower, then I'm just gonna take the loss. That's the thing. When you're trading, you make money, you lose some trades, it's guaranteed, but at least I like to make sure that I win more than I lose. So that's something to have in mind there. I'm also doing some cash secured puts on some stocks that I want to hold if I'm assigned, such as Murphy Oil, um, a stock with ticker name SHOO and LBRT. And these stocks, they're very low price to earnings ratio, but also they're very strong fundamentals in my view. I'm still, like I said, using cash secured puts and leaps to control risk and take advantage of time decay, especially on stocks that I'm comfortable owning. But I want to be very conservative, and I'm going to move on to the trading lessons that I've learned even while I was trading while I was in Switzerland. Trading from Switzerland was honestly one of the best experiences I've had, not just because of the scenery, but because of what it taught me as a trader. Switzerland is 6 hours ahead of New York time, so markets didn't open until 3:30 p.m. local time in Zurich, where I was located. That gave me the entire day to explore the country, like visiting the Lindt chocolate factory, cruising Lake Zurich, and walking through medieval towns, like places where people like Albert Einstein and famous people were actually, discussing about these interesting ideas. And I had the privilege of even, touring Lake Zurich, where Einstein and other famous Nobel laureates graduated from, without even staring on the charts or altogether. By the time I would get back to the hotel, I would see profit. So I was more like swing trading. That means buying and selling, or in some cases, I would do cash secured puts. That means I open the position by selling an option contract, and then I would close it by buying back, preferably at a lower price, and that's how you make profit. But if it continues to go down, you are more likely to be assigned. So that's how it works. So the big lesson with that, looking at the technical analysis for the stocks that I was trading from a longer time perspective, it reduces stress because I was having so much fun. But surprisingly, I was able to actually make money to even help me to actually, I didn't withdraw the money because we had planned out for the trip for all the expenses, but it was kind of like good because then I knew I was even earning money whilst I was having fun, not to even talk about the long-term portfolio that was going up as well. So another lesson is I don't have to micromanage every trade. It's very important to do research like I always do. I always take time to research, to put some thought to my trades and have specific rules that I have to follow and plan. So planning is also very, very important. So there was jet lag, but it didn't hurt my trading. Why? Because my positions were not based on fast scouts. So they were structured to give the trades time to work. And even though I wasn't watching everything, and that was very surprising because watching the market minute by minute can be emotionally draining, but I was surprisingly making money because the other time when I got back to the hotel after having a very good day, I saw my account and I cashed out almost over 600 US dollars. I was like, what? Right? So that's the point, right? As long as in that case I was doing research. But I might have been lucky. But the good thing is I look at the track record. How is my portfolio growing? Like I said, if I can maintain this or at least even grow the portfolio higher, I will see how much the portfolio will have grown by the end of the year. So I was able to enjoy the trip with my family, but also manage a profitable trading week and even my investing portfolio. So I go into the full travel experience on this channel, and make sure you subscribe and also share this video, as I will be sharing some of the key lessons that I'm learning as I'm traveling. Now, the other big takeaways with that, number one, what I'm learning is that, and I hope you can also take away from this experience, is that risk management is everything. You don't win by being right all the time. You win by making sure that your losses are controlled and your winners are allowed to run. And it's very important to know when to take the profits. For me, I always want to take the profits. And small profit is better than just seeing the profit and realize. Because what happens if the market reverses on you, then it might be even much worse. And also, I don't want to be aggressive when I'm trading. I want to play defensive, and that's how I do my trading and my investing. I do thorough research, and in case if I am wrong, I don't want one position to ruin my position and my whole portfolio, and that's something that I am mindful of. Right now, I know I'm a little bit kind of like overweight on Amazon, and that's something that I'm considering to actually exit at some point, maybe to sell some of the positions so that my position goes back to a point where I have a portfolio that is actually weighted appropriately. Because if something happens, if it's not an index that is broad and this is about investing, then it's most likely going to ruin the whole portfolio, and I don't want that. So trading can be something that, in my case, is helping to support my lifestyle, but not to replace it. And by choosing longer duration trades, setting some alerts, and focusing on quality setups, I have been able to free up time on things that really matter. Look at now, I'm recording, and the markets, I can see Bloomberg TV right there. They are talking about the bonds, the 20-year um, treasury yields, and all that's going on. But I like to do things that I'm passionate about. So this is very, very important. So this trading journey is more about not just numbers, but it's about the freedom, the consistency, and learning how to trade without losing my life to the screen. I like to do other things, taking walks, going to the gym. So if you have enjoyed this update, hit the like and subscribe button and turn on notifications so that you don't miss the next one. And if you are serious about leveling up your trading, especially if you're a beginner, check out my one-on-one coaching program. I help traders create strategies that fit their goals and lifestyle. So head to www.streetwiseeconomics.com to learn more and book a session. Let's build a community of smart, independent traders, people who trade with purpose, patience, and perspective. Thanks again for following along my journey. Whether I'm trading from my hotel in Zurich or from my desk right now in Canada, the mission stays the same: building wealth in a smart and sustainable way. I will see you in the next video. Until then, I always like to say trade and invest wisely, and may the markets be on your side. Bye bye for now. Take care.